Hey everyone, Israel Mesa here with California Financial Center in the city of Ontario, and I'll be bringing you some really good information today, especially for those first-time home buyers looking to purchase a home this year. Listen up, take some notes, feel free to send us any questions that you may have, anything I missed, and also for realtors, if you're listening to this video, some really good info for your clients here so you can make some more sales this year as well. The first questions that we get usually is, do you guys offer down payment assistance? What do I need to do to qualify? So that's what I'll be talking about today. One really good program is the CalHFA program, okay? That's the California Housing Finance Agency. And they offer a really great program for those clients that they make money. They make the money, they just haven't been able to save up for their down payment, okay? So this is just to give them a little bit of a boost, a little bit of help to get to that point. So the way it works, it's a 30-year fixed. It's going to be a conventional loan of first, or it can also be an FHA first, okay? So if you go with the conventional option, it's 97% loan to value. If you go FHA, it's going to be 96.5 loan to value first mortgage. Okay, now combined with some of the down payment assistance options that we offer, you can combine that to make up to 105% combined loan to value, which will pretty much cover all your down payment and almost all of your closing costs. One of the requirements is a 640 minimum mid FICO score. Okay, so if you guys need a little bit of help getting your FICO score where it needs to be, let us know. We'll be more than happy to help you guys get there. Another requirement is that we cannot go over 45% debt to income ratio, okay? So basically, your standard FHA, it allows you to go up to 56.9. This program, we're limited to 45%. On a conventional, we can't go over 50% debt to income ratio. Again, here we're at 45. Now, it's advisable that we stay within conforming loan amounts in order to keep the interest rate as low as possible on that first mortgage. However, we do have the option of going with the high balance if we need to. Okay, so if we need to, then we go high balance, and it's just a little bit more expensive, a little bit higher interest rate, but it's doable. All right, so here comes the fun part. Now we can combine this first mortgage with a ZIP program. The ZIP program is a zero interest program. So it's a second loan at a zero interest rate, okay? No monthly payment required, and it is a silent second. So no monthly payment, and it does have to be repaid though, okay? So you can get up to 3% or 4% loan, which has to be repaid when you either sell the property in the future or refinance, okay? So that's the ZIP. It's really meant to cover your closing costs, okay? So now you're thinking, well, if that covers my closing costs, what about my down payment? I don't have enough for my down payment. Well, then we're going to use the My Home program, okay? So the My Home program will offer you up to 3.5% loan. So now you have your first, you have your second, and you're going to have a third loan. Same way, it has to be repaid when you sell or refinance the property in the future. And it does have a deferred payment, so no monthly payment. The only difference is this one has a 2.5 simple interest on that loan. So it will accrue a small percentage every year. The third option is the school program. This one offers up to 4% to cover your down payment or closing costs. And this is offered to any teacher, and not just teachers, but also any staff member working within the school district. So that's a great program for anybody that works at a school. Okay, so again, no monthly payment on that one. And the same way as My Home, this one does have a 2.5 interest rate on it, accruing every year. A couple of bullet points here. Income limits. So you just can't make too much money to qualify for these programs, okay? So as an example, if you're looking to buy in Los Angeles or LA County, you can't make more than $128,000 $300 per year. Another example, San Bernardino, Riverside, you can't make more than $128,700 a year, okay? So that's an income limit. If I didn't mention the county that you're looking to buy, let me know and I'll give you those figures. First-time home buyer program, and basically a first-time home buyer is considered when you haven't owned within the last 3 years, okay? So let's say you owned 4 years ago, you sold it 4 years ago, you would qualify for this program since you haven't owned in the last 3. Max purchase price in the entire state of California is $765,000. So that's the maximum purchase price. Just depends on the county, okay guys? So that's pretty much the CalHFA and the options that we provide, that we offer to be able to cover your down payment and cover mostly, if not all, of your closing costs.